Hi, my name is Kevin McDonald, and I'm declaring my independence. Independence from what? Why, negative thoughts and energy, of course. Chief among them, hate, division, and fear. You see, I know that we're all one, and together we can solve any problem, save our planet and each other. Please, join me as we come together as one and choose a better way to be. So now, let's begin with my independence report.
And welcome everybody to my Independence Report. My name is Kevin McDonald, and you're listening to us here on kmmedia.pro, one of the 4 different presentations that we have. And this particular one features folks that are going to help us live our day-to-day lives just a little bit better. And by the way, if my voice sounds kind of weird, I just spent an hour talking in a different dialect for another show that I was working on. So if I go down here, that's just kind of the way it goes. But I'm going to not do that, I hope. And David Lewis is with us. He is a life insurance expert and also a individual that works with financial planning for us older folks as we get older. David, welcome to the program. How are you?
Good. Thank you for having me on the show.
You are most welcome, sir. It really is dynamic that I get to talk to you, and timely.
Yeah,
because I'm not a spring chicken anymore, and so I'm getting to the point in my life where I need to start looking. Well, let me put it another way. I passed the time in my life 10 or 15 years ago that I should have gotten my financial act together, and didn't. And so here I find myself, and am I alone in this, David, or do you find that this is kind of a common thing going on?
Yeah, I mean, it is common. It's very common, actually. There's an old saying that the best time to start making financial plans was 20 years ago, and the second best time is right now. And I think a lot of people fall into that because they. There's always something more interesting to do. I think that it's on people's radar than sitting down and talking about money and how they don't have any. You just feeling like,
depressing.
What am I supposed to do with this? In your 20s, you feel like you don't have anything. And in your 30s, you finally start getting like a little bit. So you're like, I'm not saving it. I have some now, and then, as the decades roll on, you realize, I need to do something because I have basically, kind of reveled in my growing success, whatever success I've had, over the, past few decades. So it is very common. People get to a certain age and they feel like, oh, I'm way past this. I can't do anything about it. And the reality is that you can always start. That's sort of the beautiful thing about this, is that you can always start. It doesn't really matter how old you are. I have clients in their 20s. I also have clients who started in their 50s, and even a couple that started in their early 60s. So it really is, it's not too late.
I would certainly hope not, because when you're in your 60s, you're closer to the end than you are to the beginning.
Yeah.
And like in my 20s, it was didn't have a lot of money, ended up getting married. And then in my 30s, I had kids, had the house, was trying to keep all of that together.
Yep.
And in the 40s, had the midlife crisis and spent money where I probably shouldn't have spent money doing different things. And then in the 50s, it was recovering from the 40s.
Right.
And then when I get to now I'm 60 something, and I'm starting to say, oh no, because, I read where somebody will say, will $1 million give you a nice retirement? And I don't have $1 million.
Right.
And I don't know how somebody can amass $1 million of their own money unless they get help from somebody else. How do you instruct people, and especially the guys in their 20s? They have a shot.
Yeah.
The ones in their 50s, not so much.
Well, you think that. So you think that in your 20s, I mean, so that's interesting, because when you look at both, people who are living on both sides of that continuum, people in their 20s routinely say, I don't have any money to save. How do you start saving money? I don't have any money to save. And then when you get to the folks that are in their 50s and 60s, they say, oh, it's too late. Like, I don't have the time. I mean, to a certain extent there is. You can get to a point where you can always start. And there's always it's always good to start. If you haven't done anything, it's always good to do something. But you're right. There does get to be a point where, there is sort of a deadline on, when you can start planning. You can't start even if you can only do it for 5 years. 5 years is better than no years, but 20 years is better than having 5 years to plan. So, it's somebody in their 20s really has ideally they have a long time to plan, but oftentimes they don't have, or at least they seem to think that they don't have a lot of money to do that. And so to get started, it's just as simple as, it sounds almost cliche, but you just sort of have to go cold turkey and you just have to do it. You just have to start. You have to make a plan. You have to commit to it. It's sort of like, how do you show up for work every day? How do you go to if you're a person that likes to go to the gym, I like to go to the gym, and work out. How do you go to the gym? It's usually not if you're committed to something, it's usually not torturous to do that. You start making it a habit. It starts small at first. You start with, maybe small increments, small sums of money, but you form a habit. And then once you form a habit, it's easy to sort of ratchet that up over time. And it's just a constant, this dedicated, put one foot in front of the other and just keep going.
I have a couple of children.
Yeah.
And they are in the twilight zone of financial planning, because they don't do it, and they don't recognize. And I started, and tell me if I did this right, I started when they were in their 20s and said, let's put together a budget.
Yeah. And
that seemed to be like a 4-letter word. I don't want to budget. I don't want you to see my finances. So they didn't.
Right.
So how do you get people to budget?
So that's an interesting problem. I mean,
it surely is.
So the big thing is that first of all, if somebody is really, really resistant to the idea, you simply can't force people to do things that they don't want to do. And so if somebody's committed to this idea that I'm not going to do this, I don't see the value in it. I think the big thing that's missing from a lot of financial planning, and this goes for, in financial planning, I've seen this from my peers, from other insurance agents, and also from other financial planners that I've tried to work with in the past, like a partner with on different cases and stuff, is that what's missing in a financial plan a lot of times is a vision. And the client doesn't have a vision of their future, of what it's going to be like. For example, you talk to somebody in their 20s, just a simple vision of, what are you going to do when you're, 65 years old and you have no savings? And it's easy to blow that off and say, well, I'll figure it out. No, really. What are you going to do? How is that going to work? Paint me a picture of what you think your life is going to be like. How is that? I'm not trying to bully you into something. I'm saying, how do you think that this is going to work out? And just creating that vision is oftentimes, people who have a vision, again, sort of this analogy in the gym or some lifelong career that you have a dream of it. People have a vision of their ideal career, or of like the body that they want when they're working out or losing weight or whatever. They have a vision, and that's what drives them to actually make those changes. Because without a vision, you're not going to be motivated. You're not going to be motivated to make a budget. You're not going to be motivated to save money. It's not going to happen because you can't see the benefits. You just don't see. You don't see how it's personally beneficial to you. And a lot of times with financial planners, a lot of the way that this, especially with budgeting, it's often set up as this thing where, people don't like budgeting because they view it as, I have to make sacrifices. I have to sacrifice things. And as sacrifice is something that's sort of a double, it has a sort of double meaning. On the one hand, we often think that sacrificing is something that's sort of necessary. Like you were saying earlier before the show, a necessary evil. That's part of the problem, is that people think that it is both necessary and evil. And so they just don't, it's hard to connect with that. It's sort of fun to joke around about it, but if you really think that something is not worth doing, or you're going to have to make personal sacrifices. And a sacrifice being, I have to give up something that I really, really want in exchange for something I don't really want. Where's the motivation? How are you going to get motivated to do that if that's what you're walking into? So I think the first step is to really set things up and reframe it as, what are you getting? First of all, are there any bad habits that you're going to be getting rid of? And what are you going to be getting that's positive, that's going to be a benefit to you? Because I think that's if you can figure out what's going to be positive, what sort of positive changes or what sort of benefits you're going to get out of it, it's going to be a lot easier to start budgeting.
It's weird because when you're in your 20s and you talk to a financial guy and he says, well, I know you don't make a lot of money, but surely you can find $20 a week.
Yeah.
And my response at that time was, oh, well, sure, $20 a week. What is that going to do for me?
Yeah.
That's not going to do much of anything. But over the course of years, it can do a tremendous amount if you start and you get into the habit of putting something away.
Oh, yeah.
Because what you don't want to do, David, let me paint a picture for you. I'm 64 years old. I live in a 55 plus mobile home community.
Yeah.
The reason I moved here is because I was fortunate enough I drove a bus for 12 years, was enough to save enough money to be able to buy a mobile home that I really like. It's very nice.
Yeah.
And my rent is less and so forth and so on. But there are people that are here that are in their 70s and 80s. Mm-hmm. That they're living on Social Security, and they're living on $1,400, $1,500 a month.
Yeah,
the rent is like $700, $800, and so they can't go anywhere. They can't do anything. Right. And if you talk to these people, to a person, they would say, "Man, if I just made some changes when I was in my 40s, that would have been. I wouldn't be in the position that I'm in today." Do you find that a lot of people come to you and it's kind of at this point a little hopeless?
I'd say that the people who make it to me, by the time they get to me, the short answer is no. I don't talk to a lot of people who think it's hopeless, because if it's hopeless, then they're stopped at the front door, so to speak. They stopped at the homepage of the website. They kind of dig in a little bit to the free content on the site. And then if they really do think that things are hopeless, they usually don't contact me. I have talked to people who they'll say, I don't know where to go from here. Yeah. Or I've been, one of my older clients, she had been through this she had tried to do everything right. She met with financial planners when she was younger. She started saving money. She was told, just go ahead and put most of your money, put some money in a savings account, but most of your money should be in the stock market, and then just let it ride. Everything will be fine. And after 40 or so years, what had happened was she had lost her life savings at least twice over. And the other thing about her was she had a really good saving habit. So she was a saver. She was really good at budgeting. She was really good at saving money. And she had didn't really take on a lot of debt because she didn't like paying debt. She was always of the mindset that she was going to pay cash for everything that she did, and she was going to be financially responsible. And the problem that she ran into was that she ended up with no credit. So she could never buy a house. She had found it difficult to buy a new car. There's a lot of things that were sort of doors that were closed to her. And she came to me and she said, and she didn't, so she didn't come to me thinking that things were hopeless, but what she did was she came and she said, I just don't understand what's going on here. I feel like I'm being punished for being financially responsible. I did what everybody's told me I was supposed to do, and I lost all my savings. And she was like, what do I do? I mean, like, what are you going to do? Like, what are you going to do differently? Because everybody's telling me all this stuff that's supposed to work. And and fortunately, she did make a plan, and she did make a life insurance plan. Things worked out, and basically, did a 180, and everything. It's stuff that she just didn't realize it was possible with life insurance. Her whole world was her whole worldview was changed about how finance and how all this stuff works. But no, I mean, like it's never really hopeless. But if you get that into your mindset, if you adopt that mindset that things are hopeless, and if that gets lodged in your brain, it really is hard to move forward on that.
I got a couple of questions for you. First of all, you mentioned your website.
Yeah.
So during this hour, we're going to get your website out there often so that people can go there and review it and decide whether or not working with you would be a good idea. And the name of the website is?
Website is monogenics.com. So MONEGENIX.com.
Very good. And people can go there and they can contact you through that website, right?
Yeah. So I think the big thing is, if you're going to go to the website, there's a ton of free content that you can consume on there. A lot of basic introductory information about life insurance and kind of what I do. And if you want to dig deep into it, the way to really contact me and really kind of plug into my world, so to speak, is to join the email list. So I have an email list where I send out daily emails, and a lot of that is stories and more in-depth stuff than what you'll find for free on the blog and other resources on the site.
Very good. So again, the name of the site is?
It's monogenics.com.
Monogenics.com. Very cool. Now, the other day, this was a couple of months ago, maybe now, I get this phone call, and it's a gentleman saying, "Hey, we would love to sell you. Is your life insured? Do you know what your life is worth?" And I said, "Well, let me paint a picture for you." I'm sure you've probably heard this before. Let me paint a picture for you. If I can collect on my life insurance, I'll be dead. So who cares?
Right.
But that's not all life insurance can do for you, correct?
Right. So, I mean, that is a good thing. That's a good point. Like, if you're going to buy a simple, what they call term life insurance, if you're buying term insurance, the way it's going to pay out is you die and then your beneficiaries get the money. That has its place. I mean, that has its place.
If I don't like my beneficiaries all that much, I don't necessarily want them to, get, like $100,000 or $1 million because I'll be dead.
Right. Here's all my money. Right.
Yeah.
Yeah. I mean, so that is, so I think that is, in order for the death benefit to be valuable, there have to be people in your life that you care about. And I think that is all joking aside. I mean, I have met people who joke around, "I'm not giving any money to my kids. They can figure out on their own." But in order for that death benefit to be valuable, and that is a major component of life insurance is the death benefit. When you die, there's going to be money. Then there's going to be money payable to somebody. Is that going to affect somebody's standard of living? So if you die, is that going to affect your spouse's standard of living? I mean, people can live on less. That happens all the time. Lots of people don't have life insurance. And it comes down to vision. What is your vision of the future? Do you have promises that are going to extend beyond your lifetime? Do you want your family to have the same standard of living after you die? So it really does come down to these sort of serious conversations that people kind of shy away from because nobody likes to talk about their death. Nobody likes to talk about them not being there. And so it's easy to kind of make a joke out of it and stuff. But it really does, that death benefit, in order for that to be valuable, there has to be someone that you legitimately love and care about. And that's, whether that sounds sappy or not, I don't know. But that is a fundamental aspect of life insurance. But there is another aspect of it, like you were saying, it does more than just death benefit. There are policies that help you build a savings that will take care of you when you get old, if you need long-term care, or you have a stroke or a heart attack. And so there's a lot of living benefits that you can take advantage of in some of these life insurance policies.
Do you find in your work that a lot of people think about death in the abstract, or the fact that the potential to be disabled is you can be 65 and be running around having a great time, and then you sit down and have a stroke, and then you are in a wheelchair in a rest home drooling out of the side of your mouth. So it is important that you have some kind of a plan, because the other thing is, if you don't have a plan, and then you become a burden to the people that you love.
I mean, it is people do think about death in the abstract because it's unpleasant. It's unpleasant. Nobody sits around and which is, I think, is probably psychologically healthy. You're not going to sit around and ruminate and sort of dwell on this idea that you're going to die or that you're going to be in a nursing home somewhere. But insurance is all about sort of this protection against catastrophic loss. And in an individual, what is the most catastrophic thing that could happen to a person? They could die. I mean, at some point, that's what happens. You live long enough, I mean, we have really good medical technology these days, but nothing that prevents death. And the same thing with, to a lesser extent, stroke and heart attack and things like that. Especially for guys, you and me, our odds of getting a heart attack, prostate cancer, or having a stroke, I mean, that's what kills most guys: heart attacks, or cancer. And we live old enough, that's what happens. Those are not things that people want to dwell on, but that's the reality. I mean, that's what happens. So yeah, people do think about it in the abstract because they think, oh, that's not going to happen to me. That's going to happen to somebody. I'm going to be the guy who's not going to make, and I'm like that too. Like, that's not going to happen to me. But I also carry a lot of life insurance.
There was a time I went to a restaurant happened to be with my mother, as a matter of fact, and there was a table of 14 people, and they had as we walked in the restaurant, they were from the home down the block and the assisted living home, and they were 14 people that were sitting there, and 12 of them were women, 2 of them were men. And the 2 men looked like very disengaged and looked like they were on death's door. And it's like, if you're a man and you're married, you need to protect, because you're going to live, statistically speaking, you're going to live less long than your wife is. And if you love your wife, I don't have one of those. I gave it up for Lent. But if I had one, I would want to protect her so that she could live her later years and go to the Widows Club and have a good time.
Yeah. I mean, I don't know if this is news or not, but guys do stupid things. I mean, that's why we get killed. I mean, really? we're the ones that climb up on the roof, and I know that's offensive in today's day and age to say that stuff, but we're the ones climbing up on the roof. There's anything dangerous that needs to be done. The wives are like, hey, can you do this for me? Or, and just in a profession, not that women can't do, dangerous jobs, but men statistically tend to do more dangerous jobs. So yeah, their life expectancy is not as long.
Because they're smarter than we are.
Yeah. Women are a lot smarter than we are. They've really got it figured out, because they figured out how to get us to do all the dangerous stuff so that they can outlive us.
Well, I always considered it like my wife was picking the horse.
Yeah.
It's like a horse race. I'm going to pick the horse that's going to take me the farthest and is going to win me the most money.
That's right.
And then, of course, if we break a leg in the course of that race, then it's like, she picked the wrong horse. But they statistically live a lot. My dad died when he was 76.
Yeah.
My mom recently passed. She was 90. So she lived a quarter of a century longer than he did.
Yeah.
And fortunately he was able to save enough to help her. But if you don't, and you're in your 50s, and I came to you, David, and said, I need to figure out how I can get enough money so that I can live on it. But when I die, that my family, my wife, and my grandkids and the colleges and all that stuff, they can make it. How would you suggest that they do that?
So, there's a lot of different ways. There's almost infinite number of ways you can save money, right? There's lots of different investments you can do. Everybody's got an idea about the best way to do something. The way that I do it is obviously as a life insurance agent. The way that I do that is through life insurance. So with people who come to me and say, I want to be able to save up money. If I don't use this money, then I want this money to go to my wife or my kids or whatnot. And that really, you're talking about something along the lines of a custom whole life insurance policy. So whole life insurance is a combination of savings and insurance. And the big idea behind it is that as you pay in these premiums, first of all, the policy is customized for whatever it is that you need it for. So if you need a certain amount of savings by a certain age, the policy can be customized to provide that savings either on a guaranteed or non-guaranteed basis at the age that you need it. And then it's a matter of just paying the premium. So once you figured out how much money you need, then it's math. It's just figuring out what the premiums are that have to be paid. Then you pay the premiums, and then then the savings builds up inside the contract. On the flip side of that contract is the insurance. So you've got an amount of insurance that's payable when you die. And so the big idea is that you have this contract, this insurance policy that builds up a guaranteed savings. So it protects you during your life. So you have money that you can always access whenever you need it for any reason with no penalties. It's, there's several different ways that you can access the money, either by surrendering part of the policy's for its cash value or borrowing against the policy, for short-term needs if you need it. And if you don't use all that savings when you live, while you're alive, then that gets paid along with the insurance amount when you die to whoever you name as a beneficiary. So it does a lot of things that I have found. It sort of simplifies the financial planning process, and it does a lot of things that would take several other products to do. This is basically done in one product. Not that you only have to have that one product, but I do have clients that just use whole life insurance, and it seems to work really well for them.
Well, it's one of those things where as many pots as you can put, as much money as you can in different ways.
Yeah,
it makes a great deal of sense. But if you want to accomplish more, it seems to me that a whole life policy would work because it provides you with a death benefit, which is important.
Yeah.
See, I don't have one of those.
Yeah.
So I don't have any death benefit. So when I die, it's like, how much is it going to cost to plant him?
Right.
And stuff, so it would be helpful if I had that, and but also some cash value to it on the side as well. Are the premiums prohibitive, or can they be structured in a way that makes sense?
So premiums, people tend to think of life insurance as being a cost. And when you're talking about term insurance, there is a cost associated with death benefit. The issue with whole life insurance is that it's both savings and insurance. So typically when I'm doing a life insurance plan for somebody, it's whole life, the premium, they say, well, how much is the premium? And it's really how much you want to pay, right? Or how much you feel comfortable paying, because you can schedule those premiums and then build the policy around. So if somebody could only afford, let's say, $200 a month, then you build a policy around $200 a month. If somebody can afford it. Now, the more money you put in to a whole life policy, the more cash value there is, the better the cash value growth. These policies you think of them as like a safety net, like a personal safety net. The way that whole life insurance is built and designed, it is in the industry, it's sort of considered this bulletproof product. The way that insurance companies manage the money that the policyholders are giving them, this is probably the only place that you can put money where 20 years from now, you know exactly what's going to happen. And so it really depends on how much of that money, like, do you have savings or income that you can't afford to risk? That's the money that goes into these whole life products. and that can be structured around any premium. So if I have clients that have premiums that are $200 a month. I have clients that have premiums that are $90,000, per year. I mean, that's big premiums. So these premiums they run the gamut, and it really depends on how much money you want to protect. And that's really all it comes down to. How much do you want to insure?
That's interesting. So if you are on a fixed budget, well, let me ask you a question. When do you need to start doing this? Because when you get onto a fixed budget, then you probably can't afford to continue to contribute to it. If your Social Security isn't a lot or whatever, how do you when is a great time to start doing this? Probably, I know in your 20s, but in your 20s you're going to live forever.
Right. Exactly. You're not dying in your 20s.
Nah.
So yeah. So whole life insurance can, like I said, I have clients that are in their 60s. So you can start. There's an age. Maybe it doesn't look quite as good at 65 or something like that, or 70 or something like it. It might not look so good. But if you're looking at, anytime, like in your 20s, obviously 30s, 40s, 50s, there's really no time where you can't start it unless you're at a point where you're going to retire right now. So generally I would say you want to at least be able to pay premiums for at least 5 years. Ideally, you want to be able to hold your policy for about 10 years minimum. That's a sort of a minimum. Ideally, you want to be able to hold your policy for 20 or 30 years. So yeah, somebody that's in their 30s or 40s, that's going to be an ideal time to buy life insurance. But somebody in their 50s, you figure even 50s, if you start something in your 50s, 50, 55, that puts you at, if you hold it for 20 years, you're at 70. That's sort of right in that like middle-aged area. You can do very, very well. Even, I have clients in their 50s who are starting policies, and they do expect to hold them for 20 years. So that's the caveat, is these are long-term products. So these are not things that you jump in and out of. These are things that you buy, as the name suggests, for your whole life. So you have to really, this has to be something that you want to have, for the rest of your life, that you want. Like when you buy insurance, I want to make sure that I'm protected. How long do I want to be protected? Until I die.
Well, let me paint a picture for you, sir.
Sure.
And that is because this is exactly what happened to me.
Yeah.
I was driving a bus for a living, and I was working for King County Metro here in Seattle, and was doing fabulously well. I bought my little mobile home because I wanted to set myself up for my retirement, because I was 64. I figured I'd work till 67, get Social Security, and then I would retire, and I'd have a little bit of pension and stuff like that.
Yeah.
Well, I was moving into my home, and I fell and tore my rotator cuff.
Ooh.
And had to have surgery to repair that.
Yeah.
And then I fell again, and I tripped over my son's 8-week-old puppy, and I tore my left arm all up and had to have surgery to repair that. Hence, at that particular moment, I became unemployable. I could not work anymore. And now, if I had a whole life policy, could I then take some of that money to continue to pay the premium of the life insurance?
Yeah. So there's actually a couple of things that you could do. If you became disabled, and your policy had a disability waiver on it, for example, then your premiums would be waived for as long as you were disabled. So you fall and you break your leg, you can't go to work, the insurance company is going to waive the premiums.
There's a darn nice idea.
Yeah, right. Depending on depending on how that rider from the company, because every insurance company has different stipulations in their riders. The really good companies are fairly generous on their disability waivers, so that it really just requires you to go to a doctor, and the doctor has to certify, like, he can't really work at his job, and he can't work at his chosen profession. So, and then the insurance company is like, all right, well, we're going to waive the premiums until until he can come back. So that would be an option for somebody who's disabled. provided that you have a disability waiver. If you don't have a disability waiver on your policy, then there's a couple of different options. There's an option where you can use accumulated cash values to pay the premiums on your policy. You can borrow against the policy to pay the premiums, or you can convert your policy to a paid in full. So at any time after 5 years, with the policies that I design, I know every agent is different. And I know that this is not necessarily the most common way to do it, but in my business, I do what's called custom whole life. So all of my policies are custom made and they're very flexible. And so one of the provisions in the contracts that I design for clients is the option to have a paid in full policy after 5 years. So anytime after 5 years, you could elect a paid in full policy, which means you don't need to pay premiums anymore. It's paid. You can't pay premiums. The contract is paid in full. So you're not burdened with ongoing premiums. So you can set that at any time after the policy's been issued. It doesn't have to be, you don't have to decide about that, beforehand. But so there's multiple different options if you get into any kind of trouble.
I think that's, by the way, just from personal experience, I can tell you, you do not, the disability waiver, do not decline it. Keep it. Yeah. Because that is your protection against something bad happening that's totally out of your control. Because on Sunday, I was moving. On Monday, I fell and was in the emergency room. Yeah. And I couldn't work. And so that was the last day that I was able to work. Yep. And so that it can happen that fast.
Yes.
Even though I was an athletic guy and I'm a strong guy and I thought that I could live forever and not have any of that. It happens.
It does.
Prepare yourself.
Believe it or not, it does happen. And it's one of those things where, I mean, I do have clients that don't have a disability waiver, but their policies are so flush with cash that they almost don't need it, really. I mean, they've gotten to it. The way that they funded their policy, they have enough cash where that's not necessary. But, definitely if you think that, and this is really a sort of done on an individual basis. Like if you are, sometimes it's, if you work in a job, there's certain jobs that I would say you really should have a disability waiver, because the odds of you becoming disabled are going to be pretty high. If you sit at a desk all day and you could work from home, or, you have a flexible work schedule, it may not be quite as necessary. If you're a farmer or you are someone who's, very active, yeah, you might want to consider having a disability waiver.
Well, I was a bus driver, and I can tell you my career could have ended at any given day for a bunch of different reasons.
Yeah.
Get attacked by a passenger, hit somebody, do any number of things. So it was really important that I had that kind of coverage.
Yep.
By the way, let's talk about your website again.
Monogenics.com.
Monogenics. I knew the Genix part, but at monogenics.com. What does Monogenics stand for?
So it was something that I was actually sitting around and thinking about for a long time. It was really sort of this. It was this idea that I had for sort of a more modern kind of life insurance agency. And part of the issue with that is, there's just certain things in the life insurance business that I don't know. It feels very stodgy and very old, and I didn't want that to.
Yeah, I was just going to say, in my research on you, you're an out of the box thinker, and you're coming up with a brand new way of doing this stuff. Like I'd never heard anybody say that they could tailor make a whole life policy based upon the individual, the money that they make, the situation that they're in, and to be able to make them work for it. It's not a cookie cutter thing. It's not, you can pick A, B, or C. You design it for yourself. So you're a bit of the out of the box kind of guy.
Yeah. Most insurance agents, first of all, most insurance agents don't know how to do what I do. I don't say that to make myself sound better than everybody else. It's just, this is just something that I've learned over, I've been doing this since 2004. And when I first started out, I didn't know how to do this either. And this was just something that just through making a lot of mistakes and then some of it was just being fortunate and talking to the right people who've been in the business for a long time. And they said, hey, did you know that you could do this with these products and so forth? And some companies don't let you do the type of work that I do with these products. And a lot of agents either don't know how to do it, or if they do, they're unwilling to do it for clients because it takes a lot of extra work. And then also some of the ongoing service that they have to do. They would much rather make the sale, move on to the next one, because they've got numbers that they have to hit, or they just don't want to do the service.
Well, it's important. It's important that not only that you get the sale, but that you provide the service as well, because yours is the life insurance business is the utmost in the people business.
Yes,
because you're down and dirty with all of the really nitty gritty stuff of what being human is all about.
Yeah,
the death, the dying, the
money, the highlights, right? The death and the dying,
the stuff we all look forward to spending a lot of time working on.
Catastrophic stuff. When I'm talking about stuff that people love to talk about, like, you're gonna get a stroke and you're gonna end up in a nursing home drooling all over yourself. That's the stuff you want to hear about.
Exactly, and we all enjoy talking about that. It's like over dinner, It's like,
that's right,
kids.
That's a first date conversation right there.
Yeah, it really is. My kids and I have got an agreement that if that happens to me, and I can't speak anymore, I've got this little motion that I do. It's like pushing a wheelchair over the cliff.
Yeah,
that's what they're going to do for me. Is to take me to a cliff and push me over, because that's all that'll be it.
Have you seen this? Have you seen this movie? It's a Christmas now. This around Christmas time. There's this Christmas movie called Four Christmases, I think. Have you seen this movie?
I haven't seen it yet.
Okay, it's got Vince Vaughn, I think it's in it. It's a certain, and anyway, it's but he's in the movie. He's got this thing. They have to go to these 4 Christmases, and it's like, he's got to go to his girlfriend's parents, and he's got to go to his parents, and he doesn't like his parents. So they have this code. They say if something goes wrong, the code word to get out of here is mistletoe. So I'm ready to go. Mistletoe.
Yeah, perfect.
That's right.
Let's get the hell out of here.
When you're ready to leave, that's just what you say. Mistletoe.
Yeah.
Ready to go.
Well, that works. That works. By the way, we're talking with David Lewis. He's a life insurance expert, and he's got a website called monogenics.com. And I actually said that correct. I'm so proud of myself. And so you need to go there and talk to him. And you can email him from there. And there's also a way for you to contact him. He's got lots of information there because it's complicated. This money stuff is really complicated. And if it intimidates you, you're not going to get what you need to get done. So educate yourself. Yeah.
And that's a lot. There's a lot of stuff on the website there where you can educate yourself. And that's sort of a term that gets thrown around. Do you mind if we talk about this sort of expert, this idea of the expert?
Yeah, go ahead.
This idea gets thrown around so much that A, you should trust the experts, and B, that you have to educate yourself. It sort of sounds like there's two sides of a continuum. And I try to provide a lot of information on the website. You can go there and you can read through. I've got articles on life insurance. There's an extensive guide on term life insurance, whole life insurance, universal life, the planning process that you go through, and sort of this applied financial planning, which that I do. It's called infinite banking, if people are familiar with that. And so there's a lot that you can educate yourself about just by reading, just by sort of digging into the details, trying to understand some of the more complicated stuff. And then I think and then there's this other side where people just sort of blindly trust experts to tell them what to do and to a certain extent what to think and what they should be doing. And I found that there's problems with both of those approaches. And it's something that I think just people need to be need to be aware of, is that you can educate yourself, but you can only educate yourself to a certain extent. Unless you become an expert. Like, one of the problems that people find with buying life insurance is that it can be very complicated. I've had people come to me before with life insurance policies that they bought, 10 years ago, and they thought they were working with somebody who knew what they were doing. And they handed me this policy that was ready to blow up. They were making the premiums, and it was a whole life policy, which is astounding to me because usually whole life insurance policies don't do this. But they handed me this policy, and the policy was going to lapse, and they had paid a lot of premiums into this thing. And we tried to monkey around with it, and I contacted the company and tried to fix it, whatnot. The way it was set up, it just couldn't be fixed. It had to be replaced. But blindly trusting experts can be very dangerous. So one of the things that I'm a really big advocate of is becoming your own expert. And there's a way to do that. And I talk about it when you get on the email list. I talk about how to do that, how to become kind of your own financial expert. And you can do that to a point where you can sort of, even if you don't know as much as somebody who has expertise and does this for a living, you can get to a point where you can judge the expertise of someone else, whether it's a financial guy, whether it's a lawyer, there's ways to do this where you can actually judge this and sort of become your own expert in a variety of different fields, even if you don't have that expert knowledge. And I think that's part of what people have to do. And then they also do need to have people like, yeah, you do need to have a lawyer you can trust. Yeah, you need an insurance agent you can trust. And so I think you sort of have to do a very artful blend of both of those things. Yeah, you have to trust experts, but not blindly. And yes, you can be an expert yourself, but you're never going to know as much as somebody who does it for a living. And I think that people get into trouble when they try to go kind of to this extreme and they become like Google experts. So they're Googling stuff online. They're like, oh, I know everything about this. I go to WebMD. I'm a doctor now. You know what I mean? And they also get into trouble just by, I'm going to use, the financial planner that my dad used because, I had a client years and years ago. This guy, he used a financial planner that his dad used. Well, come to find out, the investment advisor that he was using was trading on his dad's account and lost him $100,000 on his life savings just by making these trades. And the advisor made a bad decision, but the dad was the one that had to pay for it. And the son just sort of walked into it because, hey, this was my dad's financial planner. He must know what he's doing. Wrong.
Well, and the sad thing about that too is that if you don't pick the right financial planner, they may have a disingenuous incentive to put you into programs and things where they make commission on it so they can make money themselves, but it may not be the best place for you to have your money. I had a food and beverage director one time when I was in the restaurant business. Yeah. And he had a catering guy, and he had a bar guy, and he had a restaurant guy, and he had a chef guy. And I said, how do you know all of these things? Because you've got all these experts in their fields around you. Yeah. How do you know? And he said, well, my job is to make sure that I know enough that they can't bullshit me.
Right.
And that's exactly, I think, as we're running our own corporations, our own households, which is really our own corporations, we have to know enough so that somebody can't sell you a line.
Yeah. And unfortunately, there's a lot of that out there.
Yes.
There's a lot of that out there.
It's intimidating for people if they can't, if you're talking to a guy and you don't even understand the words he's using.
Yeah.
And things. So
it's tricky in the life insurance business, partially because the life insurance industry has sort of its own jargon, and it's jargon that nobody uses in real life. It's only used in the insurance industry. And so if I start talking to somebody about the paid up additions rider on a life insurance policy, you're only using that in the life insurance industry. Nobody knows what that is. And so that's where it comes into that's where it comes into play. Like, yeah, you need to educate yourself about some of the special terms that are used in the insurance business. But then you also don't necessarily want to be doing business with people who take this, and I define sort of the two basic approaches that financial planners tend to take, insurance agents take. One is sort of this authoritarian advice giver model. And the other approach is what I consider to be like a self-leader approach. And the authoritarian advice giver model is essentially this financial planner or insurance agent that is basically saying, do this, not that. I'm going to tell you what to do. I know what's in your best interest. First of all, nobody knows what's in your best interest but you. Nobody's going to care about your money more than you do. And anybody who tells you otherwise is lying to you. They're trying to get your money.
And the reverse is also true. Nobody's going to give you a napkin to wipe your tears when you've lost your money.
No. If your advisor makes a mistake and there's no consequences for him, guess what's going to happen? At some point you are going to get screwed.
There are lots of examples of that.
Yeah.
Especially like pro athletes. They've got a lot of money and they put it in the wrong hands, and then they wake up one day and they got nothing. Or a lotto winner that statistically has been proven that they lose all of their money too.
Yep.
So how would you suggest then somebody vet the right person, and what are some of the signs they can look for?
Well, so, and I know this is probably easier said than done. Someone who's a good advisor is not an advice giver. And that's a hard thing to come by, because a lot of times when you see a financial advisor, they're all about, I'm going to tell you what to do, and let me tell you what. And people ask, it's a setup too, because people ask, well, where should I be putting my money? What do you think I should be buying? And an advisor might say like, well, I think you should be doing this. Let me make a little plan for you. And that's sort of the tip off. Financial planner, the idea that I could make a plan for you, in my weird way of thinking, is ridiculous. How do I know? How could I make a master plan for your life? How could I possibly plan out what you're going to do? So clients have to come to the table having at least even if they don't know the specifics, and a lot of people don't know the specifics, but you got to come to the table having just a general idea of what you want, what values in your life are important to you, like what are the things that you really value in life, and then also just a general idea of like, what is your vision, what do you want to have happen, and so it should not be a discussion of the advisor telling you what to do. It should be more of a discussion of, how do I accomplish these? Here's what I want to do, A, B, and C. Like, what are some options that I have? And a good advisor is not going to tell you what to do. They're going to give, first of all, they're going to give you information. They're going to explain what options you have, and they're going to tell you this is the cost, and here's the trade-off that you're going to be making. If you do this, it means you're not going to be able to do these other things. And they're going to help you think about, they're going to actually be someone who's going to help you. And really, if they're good, they're going to teach you how to think, not what to think. So they're really going to show you like, okay, this is how you have to think about this financial problem. And you're ultimately going to have to make the decision. So you as a client are going to have to make the decision. The advisor is going to say, here's the cost, here's the benefit, here's the trade-off that you're making by taking this versus this. But ultimately, you have to decide what's most important to you. And if you don't know what's important to you, that's how you fall into a trap, because that's what sort of these people that I would consider kind of shady, they're going to take advantage of that. That's what some advisors take advantage of. They take advantage of people who don't really know what they want. And a good advisor is going to promote this idea of self-leadership. He's going to move his clients from a state of dependency to independence. And that is sort of what I have found consistently over and over again. When you move clients from a state of being dependent on you for advice, or dependent on me for advice, and you move those people to being independent, so they need me less and less and less over time, you get, first of all, the clients are happier, and secondly, they're more successful. When whatever it is they do, the closer you move to being a self-leader and being independent, Someone who's financially independent, for example, does not depend on their financial advisor for every problem they have.
No, there's no. They've got it figured out.
Yeah,
to a large degree.
Now, that doesn't mean that they don't seek advice. That doesn't mean that they don't want information, that they don't want options. They still talk to, people who are financially independent still talk to an insurance agent or a financial advisor, or they talk to a lawyer, but they're not looking to be told what to do. They're looking for options. They're looking for information. They're looking for ways that things could go sideways on them. That's what they're looking for. And, the idea that somebody else is going to do something for you, that's a myth. Nobody's going to do something. Nobody's going to give you financial security or give you financial independence. That's something that you have to work. That's something you have to work for yourself. And the advisor is simply there to sort of coach you, help you, sort of just apprise you of, what it's going to cost and sort of what, kind of what it looks like, what's going to happen, like what the costs are to make all this happen and what the benefits are.
By the way, we're talking with David Lewis. Now, if somebody wants to contact you, you work with people via Zoom and all over the place, I would imagine.
Yeah, so everything's online now. In the early days, it was still like a door-to-door. I'd call people or people would call me, and I'd make house calls. But anymore, everything is done via video chat or phone. Applications are signed, everything's like online. So you fill out applications for insurance online. Documents are all handled, through DocuSign. It's, why do we have cars anymore? I don't know. Tesla's got this idea that there's going to be like robo taxis and all this other stuff. And like, nobody's going to drive anywhere. Everybody's on Zoom now.
Yeah, and they'll be in communities where they can walk around and then they can work from home and all that kind of stuff.
Right.
David, it's been a pleasure talking with you, and you'll have to come back and we'll have to ferret out this more down the road and maybe take calls. And it'd be interesting to have you on KKNW, the AM radio show, and we can take some calls for people that are really, really financially strapped or got problems.
Yeah, that would be interesting. I love that. Taking calls would actually be a lot of fun, I think.
I think it would, and you got to be careful, but you know how that goes. So
maybe they'll just say, yeah, you know what though, somebody could throw me a curveball, and then you could stump the insurance agent.
Exactly.
Make me look like an idiot on the radio.
Nah. You're a smart guy. You got it all figured out. You really do. David Lewis, thank you so much. Your website again is
Monegenics, MONEGENIX.
And I appreciate your time. We got to go, but I'll be in touch with you. Stay right where you are. I'll be right back.
Okay.
Hey, and thanks for listening to this episode all the way to the end. Hey, pretty cool. Hey, don't forget to follow us so you can receive regular updates and new posts. And remember, take care of each other because each other's all we've got. See you next time on My Independence Report.